Hello everyone and welcome to the lesson. Today we are going to look at a new topic which is known as forensic accounting. Forensic accounting is organized into 5 subtopics. Number 1 is difference between a statutory audit and a forensic audit. Number 2, conduct of forensic investigations. Number 3, rules of evidence in court proceedings. Number 4, regulations and standards on forensic accounting. Number 5, applicable codes of ethics. So the first subtopic is difference between a statutory audit and a forensic audit. But before we get into differentiating the two, we're going first of all to define forensic accounting. Forensic accounting, candidates, refers to the application of accounting principles, investigative techniques, and legal concepts to analyze financial information, detect financial fraud, and provide litigation support in legal proceedings. That's the meaning of forensic accounting. Forensic accounting, first of all, is or refers to the application of accounting principles. Application of accounting principles, number 1. Then there is investigative techniques. The application of investigative techniques. So number 1, application of accounting principles. Number 2, investigative techniques and legal concepts. And application of legal concepts. And what's the purpose? The purpose is to analyze financial information. To analyze financial information. So here, candidates, accounting principles are applied. Application of accounting principles. Then you have application of investigative techniques and application of legal concepts to analyze financial information and provide legal support or litigation support and provide litigation support in legal proceedings. So forensic accounting refers to the application of accounting principles, investigative techniques, and legal concepts, 3 things, to analyze financial information and provide litigation support in legal proceedings. It involves a combination of skills. It involves the use of accounting skills and specialized investigative methodologies to uncover and document financial irregularities, evaluate economic damages, and present findings in a manner that is admissible in legal proceedings. So candidates, forensic accountants are professionals who combine their accounting expertise with investigative skills to investigate complex financial records and documentation. And they work in collaboration with law enforcement agencies, they work in collaboration with legal professionals, or even private organizations to conduct investigations related to financial disputes, related to corporate fraud, related to embezzlement, related to money laundering, and other financial crimes. So that's the meaning of forensic accounting. It is the application of accounting principles, investigative techniques, and legal concepts to analyze financial information and provide litigation support in legal proceedings. So the forensic accountants help to uncover financial crimes. And candidates, the primary goals. Let me mention some important points here in relation to the primary goals. The primary goals of forensic accounting. Primary goals. The primary goals of forensic accounting. Number one is detection and prevention of fraud. One, detection and prevention of financial fraud. Detection and prevention of financial fraud. That is one primary goal of financial accounting. Financial forensic accounting, not financial but forensic accounting. Forensic accounting, candidates employ, the forensic accountants employ various techniques such as data analysis, such as transaction tracing, such as forensic interviews, in order to identify and prevent fraudulent activities within organizations. The second primary goal or objective of forensic accounting is financial investigation and analysis. Financial investigations and analysis. Here, candidates, forensic accountants examine financial records, they examine transactions and documentation to reconstruct financial activities, to identify irregularities and determine the extent of financial losses or damages. The third goal, litigation support. Litigation support. Forensic accountants assist in legal proceedings by providing expert opinions, by preparing financial reports, and offering testimony related to financial matters in court. They may also assist in quantifying economic damages and assessing the financial implications of legal disputes. So they provide litigation support in legal proceedings. 4, I'm outlining the primary goals of forensic accounting. Risk assessment and compliance. Risk assessment and compliance. Forensic accountants help organizations identify and mitigate financial risks by assessing internal controls, by developing fraud prevention measures, and also ensuring compliance with regulatory requirements. compliance with the regulatory requirements. So candidates, that is the meaning of forensic accounting. Forensic accounting. I've said it refers to the application of accounting principles, investigative techniques, and legal concepts to analyze financial information and provide litigation support in legal proceedings. And in summary, candidates, we can say that forensic accounting plays a crucial role in investigating financial misconducts, supporting legal cases, and promoting financial transparency and integrity in both the private sector and the public sector. So that is all we can say as far as the definition of forensic accounting is concerned. We've also highlighted the goals of forensic accounting. We say number 1 is detection and prevention of financial fraud. Number 2, financial investigation and analysis. Number 3, providing litigation support in court. Then lastly, risk assessment and compliance. We are now going to tackle the first item under this topic. This was an introductory. So we are now to move on to the first subtopic, which is differentiate between a statutory audit and a forensic audit. Differentiation between a statutory audit and forensic. Now, the basis for distinction will be 1, purpose. We are going to distinguish these two based on 1, purpose. We all know that a statutory audit is conducted to ensure compliance with legal and regulatory requirements. The purpose, one of the main purpose is to ensure compliance with the laws, ensure compliance with legal requirements. You understand? The purpose of a statutory audit, as the name suggests, statutory derived from the word statute, which is an act of parliament. Statutory. The law requires companies to conduct statutory audits. It's a mandatory. That's what the law says. Particularly in relation to financial reporting. And a statutory audit verifies the accuracy and fairness of financial statements and provides an independent opinion on the financial position and also the performance of an organization. That is not the case for forensic audit. Forensic audit, the purpose is not to ensure compliance with legal requirements. The second basis for distinguishing the two is the scope. The scope. The scope. A statutory audit focuses on examining financial records, transactions, and internal controls to determine whether the financial statements present a true and fair view of an organization's financial position. The scope, it focuses on examining financial records, transactions, and internal controls or internal control system. That's not the case for forensic auditing. That is number 2, the scope. Then number 3, the third basis for comparison is on objective. We can distinguish the two based on the objectives. The main objective of a statutory audit is to express an opinion on fairness and reliability of the financial statements. Express an opinion on the fairness and reliability of financial statements. That is not the objective for forensic audit. Then we have number 4. Number 4, the fourth basis for distinction, number 4, is the auditor's role. What is the auditor's role in a statutory audit? Now, the auditor's role is to assess financial records, to test controls, to verify the accuracy of financial statements, and to issue an audit report. Do you understand? Assess financial records. Test controls. An auditor assesses financial records. An auditor tests the controls. An auditor verifies accuracy of statements. Verify accuracy of statements. Then an auditor is expected to issue a report. That is not the case for forensic audit. That is number 4. Auditor's role. Then we can analyze or distinguish the two based on number 5, legal requirement. Legal what? Legal requirement. Statutory audits are mandatory. Statutory audits, we can also say, are mandated by law or regulatory bodies and are typically required for companies, are required for government entities and other organizations to comply with legal obligations. They are mandated by law. They are mandated by law. But forensic audits are not mandated by law. Are not mandated by law. So these are the basis for distinction. Number 1 is purpose. The purpose of statutory audit is to ensure compliance with legal requirements. But the purpose of a forensic audit is to investigate potential fraud. It's just to investigate. Purpose of a forensic audit is to investigate potential fraud, to investigate, say, financial irregularities, financial irregularities. Another purpose of a forensic audit is to investigate financial irregularities or even misconduct within an organization. It is not to comply with any law. Then number 2 is the distinction based on the scope. We've seen that the scope of statutory audit is to examine financial records, is to examine the financial transactions and the internal controls. That is the scope. Before the audit issues an opinion, then he examines financial records. They are limited to financial records, limited to financial transactions, limited to the company's internal control. But as for the forensic audit, it goes beyond the examination of financial statements. Goes beyond examination of financial records. A statutory audit is limited to financial records, but a forensic audit goes beyond the examination of financial statements or records and may involve in-depth analysis of financial records, transactions, documents, and interviews with relevant parties. It goes beyond financial statements or records. The third basis for distinction is the objective. We have seen that the objective of a statutory audit is to express an opinion on the fairness and reliability of financial statements. But the primary objective of a forensic audit is to identify and document evidence of fraud. Identify and document evidence of fraud. It is to identify and document evidence of fraud, evidence of financial misappropriation or other illegal activities. And here it aims to support legal proceedings. It aims to support legal proceedings in court. Legal proceedings in court. It aims to support legal proceedings. It may also help in dispute resolution or internal disciplinary actions. Number 4, auditor's role. The auditor's role in a statutory audit is to assess financial records, to test controls, to verify accuracy of statements, and issue a report. But a forensic auditor acts as an investigator. Acts as an investigator. A forensic auditor acts as an investigator using specialized skills and techniques. When we defined forensic auditing or accounting, we mentioned investigative techniques. It's a combination of accounting concepts investigative techniques, and legal concepts. All right? Acts as an investigator, and he uses specialized skills and techniques to uncover and document evidence of fraudulent activities. And here the forensic auditor may work closely with legal advisors, legal authorities, law enforcement agencies, and even internal investigators. Then another basis for distinction between statutory audit and forensic audit is legal requirement. Statutory audits are mandated by law, but forensic audits are triggered in response to specific concerns. Triggered in response to specific concerns. Forensic audits are not mandated by law, but they are triggered or initiated in response to specific concerns, in response to suspicions, in response to allegations of fraud, in response to misconduct, or even in response to financial impropriety. So these are 5 distinctions between statutory audit and forensic audit. You are to differentiate between the two. So the first basis for distinction is purpose. The purposes are different, the scope is different, the objectives are different, the auditor's role is different, the legal requirements are different. So we have 5 distinctions. Now, in summary, candidates, a statutory audit focuses on evaluating financial statements for compliance and reliability, while a forensic audit involves investigating and gathering evidence related to potential fraud or misconduct. Another point to note is that statutory audits are regular. They are routine audits required by law, while forensic audits are typically conducted in response to specific incidents or concerns. We mentioned the concerns. It could be suspicion of fraud, it could be suspicion of misconduct, or it could be suspicion of financial impropriety, it could be allegations of fraud, specific concerns, and so on. So that will mark the end of the lesson, where we've introduced the topic forensic accounting, and I started by giving an adumbration of the chapter. I've defined forensic accounting. I've laid out the primary goals of forensic accounting. Then finally, we have differentiated statutory audits from forensic audit. Thank you for choosing to study with us. In our next session, we are going to study conduct of forensic investigations, which involve accepting the investigation, planning the investigation, evidence gathering, and reporting. Bye-bye.